What are the biggest enemies within financial markets? Two sisters, fear and greed. That means emotions, strong emotions. And in most of the cases where people, both retail investors and professional, let's call it professional investors, fail, the reason for this failing is based on fear and or greed. So you have to manage your emotions.
Welcome to Investing Insights, where we chat with experts from various industries to uncover investing and life lessons that empower everyday people like you. Today, we're kicking off with Gerold Muhr, the founder of Investling and a veteran in higher education and edutech. Before we dive in, a quick introduction to Gerold. Born in 1967 in Austria, Gerold studied philosophy and literary studies in Graz. He began his career as a curator and artist based in Graz, collaborating with the group Schlauch on innovative projects in sound performance and media art from the mid-90s. In the late 90s, he worked with AI in finance in Frankfurt. Later, Gerold served as a program director for the EU-funded seven-figure R&D project eCulture. There, he focused on developing and applying an online learning platform for the education of bank employees. He then founded the Brand University of Applied Sciences in 2009, where he's led for over 15 years, shaping applied learning in branding and related fields. More recently, he founded Investling, a platform dedicated to making financial education accessible, structured, and empowering for beginners through AI-driven tools and a clear learning path. This podcast episode is for financial education purposes only and does not constitute financial advice. Always consult a qualified professional for personalized guidance. Gerold, thanks for joining us to Investing Insights episode number 1. It's great to have the mind behind Investing in front of the camera, talking to our community. And you finished university when I was born. There are a lot of stories we could talk about. So many more podcast series will most likely come. But let's maybe start first in Austria, where you and I both have our roots. And I would like to understand a bit, like coming from this rural background in Austria, then moving to Graz, working in a more, let's say, artsy university environment, later moving into the financial world of Frankfurt. How has your personal mindset about finance and money shifted and evolved throughout all of those years?
Well, pleasure being here. Very nice. Actually, thinking about my childhood and youth, money somehow on the surface was not a subject at all. It's positive and negative, of course. On one side, it means that obviously in my family, my parents had at least enough money so that it wasn't a daily subject or topic or challenge or whatsoever. On the other side, as you grow up without money talk or financials or something like else, you, of course, are not developing any kind of sense for money, investing, and related topics. So you grow up in a perfect childhood and a perfect youth, beyond money, with a lot of nature and the force. But once you get 18 or something like, and you study and you have to rely on your own. Also, you're supported with money and so forth by your parents as long as you study. You surface new challenges you are not used to as you surface money as a topic. You have to, the first time from your 18th year, for the first time, you have to think about money and how to spend it. You receive monthly payment and you have to think how to spend it. And it's a challenge, unfortunately.
So then comes the moment where you have to take some risk because you have to decide, what do I do with my money? Do I just save it? Do I spend it on travels and party in my next business venture? And knowing how in Austria we have a more of a conservative thinking about it, what something that maybe worked a few centuries ago was having a savings account where you get some returns on your money, and then maybe finally being able to buy your own home, being able to really build your own house. Is that something that was for you, something that was important in your life, or did you consider this as something low risk or high risk? And how did this evolve for you taking those first financial decisions on your own?
Well, actually, following up to my comments, I always was lucky when it was about money. So from my 18th birthday, so to speak, when I started studying, the first couple of years, the money was available from my parents' side and also from my grandparents' side. And then quite sudden, I think, as far as I can remember, when I was something like 24, at the end of my studies, my father died and I received some kind of pension, if you like. And at the same moment, I was with some kind of erratic biography until then. I walked into certain areas and I automatically received some money offers or income offers or task or project or something. So money continued not being a main topic or a challenge. The first time when I started thinking about was I was running some kind of music club in my in Graz, in the town of my studies, and it was quite successful, and therefore there was a lot of money suddenly, more money than I could spend within the next month, because that was the challenge. How do I spend it? Yeah, I didn't waste it, but I spent it, so maybe a little bit left on the account at the end of the month. But suddenly we had more than enough. I had more than enough. And this was the moment, I think it was something like 26, when I started thinking about, okay, what a pity there's such a huge amount of money on my banking account. And at the same time, as in my families around, there were a couple of guys, investment bank or something like this. I started, okay, it would be maybe interesting to think about investing this money. And that's why I started doing a little bit research. One shouldn't forget it was in the early or in the mid of the 90s. So internet was not really present. It already existed. I got access via university, but it was a joke in comparison to today. But I started to do a little bit research. I saw, okay, there is some kind of, there are financial markets. There are stock markets in Germany, in the US. There are stocks, there are shares, there are other things. And one, I thought, could invest a little bit of money into this. But additionally, shouldn't forget, at this time, there was no internet broker. There was no internet banking yet. So it was not that easy to say, okay, I start the browser. I look for a perfect broker or online bank or something like this. And I started depot an account or something like this. No, you had to go to a certain bank, to the branch of a certain bank, and you have to say something like this. So you couldn't trade with stocks in a direct way as a retail investor, as it's called today. And these existing barriers prevented me additional couples of years to start really being active in this area.
And I assume you had to figure out all of that on your own.
Yes, of course. But that's the
I
point.
pers-
No mentor around. No mentor around.
yeah, I was lucky because I had you mentoring me and really remembering when I was like 28, saying like, Georg, do something with your money. It's really important to start investing early. But could you maybe highlight this again? Why is it so important starting early? Why cannot someone say, I just make money and when I'm 45, then I will take care of my finances and my investing background? Could you maybe elaborate a bit on that?
It's just that simple. You have this long-term effect. One thinks maybe invest, but I don't know. Nowadays, ETFs are very fashionable. So you read and say this is a quite safe ETF with low risk, and it's just 5 or 6% per year. And in people's mind, normally you imagine, okay, so maybe it's 60, 70% in 10 or 15 years, but that's not true. So uh, starting with 45, for example, and doing it 20 years until you're 65, and normally you retire. And the difference starting with 25 or 30 is a huge difference. You won't have twice of the money, but maybe 6 to 7 times. That's the effect of long-term investing, and that's the reason why it's important to start as early as possible. The best case was 4 or 5 in the kindergarten or something like this.
Yeah, you mentioned it. It's far more accessible right now. How were you able to buy your first, let's say, stocks? So really financial products from the financial markets. I mean, later
I
you lived in Frankfurt. Did you have to go to the broker or to the stock exchange and buy it there?
No, no. As you already mentioned, uh, I think in 1999 I left Austria for other reasons, not for finance reasons, for artificial intelligence reasons. I went to Frankfurt, one of the main financial capitals in Europe beside London. The, the financial capital of continental Europe, still today. Also, most of the private banks disappeared meantime. Um, and as this project, this certain startup project I was participating in, was related to a private financial university in Frankfurt, I got in contact with notorious people, so to speak, from an ironic point of view. So people from the restaurant area too. And this inspiration, being surrounded by these people, this new biodope or the ecosystem or whatsoever, completely different to my ecosystem and my environment in Graz, which was rather scientific and artistic and something like this.
Mm.
I got enough inspiration to deepen my interest and to start acting. And as far as I can remember, it's not yesterday. I started an online account. Yes, I started an online account in 1999 at a German broker online bank called, it still exists, called Consors Bank. So it was, obviously it was possible to start an online account. It was not a depot. It was not a brokerage account in a direct way, but it was an online account, but it was strongly focused on investing. And that's when I started. I think it was in November 1999. So maybe there's some kind of anniversary nearby now. 26 years, as far as I can count. So 26 years ago. And the nice thing was, it was easier, so to speak, than today. Why? Because the choice, the possibility of select out of 1,000 shares and other financial products wasn't available. You had a couple of stocks, you had a couple of shares. It was rather difficult and quite expensive to buy, for example, American shares or other assets. So in the first time I was focused on German stocks from DAX 30 and other indices from the German stock market. And I can't remember, but it was not relevant. I bought it. And the nice thing then was, and that's an additional motivation why I started then, and then until I think 2000 or 2001, you didn't have to pay taxes after 1 year of holding a certain stock or something like this.
Mhm.
It was very nice, but they stopped it, I think, in 2000 or 2001. That's
Hmm.
that's how my access looked like. Just that simple. I invested something like, I don't know, 20, 30,000 euros, and I didn't really care as everything was a little bit more difficult. Day trading was not really a topic and not really available for retail investors. So I kept my fingers out of it. I looked into my account something like weekly, but it developed and it was not really relevant.
But interesting how you explain you move from one city to another. You have completely different environment of friends or business partners, and how that immediately shapes your focus onto different
Yeah.
topics. Because it was not just the financial topic, you also started to work on AI. Is this right? Like, how can I imagine an AI development in the end of the 90s? I remember I played some computer games, the first ones, so there were some things maybe moving, which you could call some AI where something happened after you did something, but maybe you could highlight that a bit for us.
Well, from today's perspective, it was rather awkward in comparison to
Hmm.
today's possibilities and progress. The main difference between then and today was the computation power you had available, which was a joke, and the training data you had access to, as internet was not really, even in 1999, not really fast and stuffed with huge amounts of data. So we were very restricted. But of course, we didn't know, as it was the present and we couldn't foresee the future. There were already this main paradigm of neural networks and algorithms, of course. We had a certain approach. I don't want to go into details, but the interesting thing might be that the context or the expectations towards this startup we started to build up, as money came from financial industry, they expected significant added value when it's about prognosis of the development of financial markets, different segments, different shares, and so forth. That was the expectation and the mission, so to speak, of this startup. Nowadays, looking at artificial intelligence nowadays, it's nice, it's really nice. It's a nice project then. It was a nice project then, but it's incredible. So, but also to make some kind of bridging, of course we failed. That's clear. There's nothing to hide. We completely failed because the idea, the vision, the expectations and all the things didn't match the reality, because it was, to give you an example. Nowadays, if you have some kind of artificial intelligence, visual computation, visual artificial intelligence, it's not any problem for some kind of artificial intelligence software to recognize an object. Doesn't matter from which perspective this object looks. To recognize you, for example, just based on one photo they did and so forth. Then in these days, if you wanted to make artificial intelligence program recognize some kind of, for example, a matchbox car, you had to make at least a couple of thousands photographs and video shots of this matchbox car from any possible perspective and angle. Otherwise, the artificial intelligence failed, thinking these are 2 or 1,000 completely different matchbox cars. And taking these really restricted possibilities and projecting it on some hopefully projections and prognosis within financial markets can show you that we had to fail. We simply had to fail. It was some kind of science fiction project, and it was really, really interesting because I learned a lot about how human beings learn. And actually, then during this 2.5 years working as a program manager in this project and dealing and digging deep into the question of learning psychology and how to develop competence as a model for artificial intelligence, it was significant. And from then, actually, my interest in how to learn in the best possible way was some kind of red line during the following decades in my life.
That's interesting. Yeah, because later you worked on several projects in higher education, building university programs, even co-founding a university in Hamburg, the Brand University. So if I ask you today, like having both of this background, a deep expertise in higher education where you get formal degrees and where you can prepare for a career, but also knowing the extreme development that we had now in AI, what do you consider as being more relevant and more important? A formal degree, maybe a specific skill, or is it just knowing the right people and having the right network?
Of course, a formal degree is rather irrelevant in most of the cases. As far as you could see within this, at least last 16 to 17 years since we have been founding Brand University, comparing, analyzing other universities, both private universities and public universities, both in Germany and abroad. 95% of any bachelor and master program is not really relevant when it's about developing competence. It can be a nice framework, especially when you're studying at university, so-called universities in Germany. It's called University of Applied Sciences. That means it's rather applied. You have a huge amount of training parts, not memorizing information and the thing. You have to practice. There are people from the industries included. They're training you, they're mentoring you, they're coaching you, and so forth. But nevertheless, making your own experiences and maybe then having some kind of mentor or coach, analyzing your experiences and giving you structure, a structural framework, has much higher value than just doing 3 years of a bachelor program or 2 years of a master program and collecting some kind of certificate and showing off the certificate. In most of the cases, when you start working in a company, wherever, in what kind of an industry ever, you nearly have to start from zero. And that's still a problem. Also, and then you have regulations within European Union, how to develop a master bachelor program, accreditations, all these things. So everybody should look to have as early as possible, as much experience as possible, and then maybe look for some kind of structured learning framework. Might be university, might be a training provider, something like this, where you can add this structure, and especially, and that's the relevant thing you might learn in a university context, methodical skills, how to think, how to write, how to analyze, and so forth. All these kinds of methodological skills you would need, and in most of the cases, it's more difficult to train it for yourself. And this combined with experience and, of course, social competence, personal competence, and a nice network built from the early ages is the perfect portfolio, guaranteeing or making higher probability of success. However you define success for yourself, completely different. I'm not talking about career, talking about having goals, visions, defining a strategy and reaching whatever you would like to reach. Some people want to get rich, some people want to become CEOs, other people want to live in the woods, and so forth. So success is not only related to commercial, career related, or financial success. Right. So learning by doing, to sum it up, learning by doing in a structured framework, from my experience, seems to be the best way. And it's the same when it's about financial competence, investing competence, of course.
Yeah. Yeah, it's interesting because all this knowledge that we usually have to gather first nowadays, we can get it much easier through AI. And it's really about applying it in the right setting. Talking about the investing then, like what motivated you to say, okay, let's build a training program for people to learn how to invest? What's your underlying motivation, and what was for you essential what this program has to have then?
The point is, since I started in 1999, as I mentioned, I was always looking for some kind of developing my competence when it's about investing. And you also shouldn't forget, YouTube didn't really exist then. It was not relevant. Social media too. So the sources in the internet were restricted. And I always had this urge, as I'm a rather methodical, analytic guy. So I want to understand things and their structure and their single parts and how it is built together. So I always had this urge to find some kind of further education when it's about developing my investment skills, my financial skills, my financial literacy, as it's called nowadays. And I couldn't find it. And I couldn't find it actually until today. I couldn't find anything from any provider that would satisfy me. Most of the cases, it's just, for example, a pile of videos without any structure, curriculum from A to Z, or it's a pile of texts, or it's a glossary, or what, you name it. But it never supported my intention to build up a structured knowledge about the essential things, like an encyclopedia or something, and to support me developing these applied skills, because that's what's relevant. It wouldn't help to have an encyclopedic knowledge about any aspect of financial market, and then you can't trade or invest because you didn't train, you have no experience, therefore you have no competence. And that's the reason. I wasn't desperate, but I was really more and more, excuse my French, pissed off, because and I couldn't understand. Everybody wants to get rich. There are a huge financial industry also related to retail investors, but also the brokers up to today aren't interested, either not interested or not inspired to provide something like a structured financial course about this thing. And maybe there's also a lack of competence, because you have to buy, or you have to have better pedagogical competence. You have to know how to build a learning concept which provides best possible support for developing competence, financial investing competence, in a structured way. Maybe that's also a problem. We have financial industry, we have brokers with the legal obligation to provide some kind of information so that your customers, your clients are not stupid, and you prevent them from ruining themselves or something like this. But it's just by law. And obviously, that's my interpretation of the situation. Nobody thinks about, for example, cooperating with some kind of university or financial education institution or something like this. And that's when I decided, also based on my knowledge about learning and higher education and further education and so forth, it's now time to build this up with myself as my first client, customer, or whatever you may call it. So I really start trying to build up exactly this kind of education course or whatever that matches with my expectations and my demand. Because after all, I'm just a retail investor. Meantime, with decades of experience, but I'm a retail investor. So I also didn't want to book some kind of online course or something for financial professionals, so-called financial professionals, because it's completely different. You learn different things, and that's not relevant for me as a retail investor.
Mm-hmm. So, if I understand it correctly, you take this, we're at a complex financial world where we have a lot of different new terms, and you break them into small video sessions so people can learn this knowledge. But how do I really learn them? You're an expert on this way of applied learning, but can you maybe explain how that works? Like how does my brain consume information and then replicates it by doing something properly, so I can really say, okay, I learned a skill now, or I really understand something?
Listen, the problem or the challenge starts with nowadays internet. You're sitting in front of your notebook. You already opened some kind of account at depot. And one afternoon you sit in front of your notebook and you want to buy a share of a company. So what? Then you look. And as you have access to a huge amount of different financial markets and asset classes, stocks, ETFs, bonds, whatsoever, you name it, thousands of possibilities, tens of thousands of possibilities are bombarding you. And you have no idea what to do. Then you look, you're looking in the internet for experts or articles, tips, hints. And then the same is happening again. Tens of thousands of different opinions, at least hundreds of different opinions about a single share like Tesla or something like this. Buy it, don't buy it because, don't buy it because, hold it, stop, reduce, blah, blah, blah. You don't know what it means. Does it mean hold, reduce, upgrade, downgrade, whatsoever? You don't know which of these experts, analysts, whatsoever. You don't know what analysts are. You don't know the categories of people telling you to buy or not to buy. You have journalists, you have financial journalists, you have non-financial journalists, you have analysts, you have influencer nowadays, and you are no way able to decide whose opinion or recommendation is relevant and what not. So you have this twice situation, thousands of possibilities to buy and thousands of opinions to buy or not to buy. How do you deal with this? So it's like it's like a huge amount of particles bombarding you. And the question is how to find a way through.
Mhm.
And the quite simple answer to my opinion is you have to build a line from this four-dimensional space of information available, tiny fragments. You have to build a line, and this line is some kind of knowledge line. And what we try to do with this course is to build a line through this, let's call it jungle of information and jungle of possibilities. And that's
Mhm.
what I mentioned before. It's not about to have a pile of videos again, because then you would answer a huge pile of information and possibilities with a rather big pile, a growing pile of videos or other kind of content about learning. And this is not a solution. You can't solve the challenge of a pile with a smaller pile. And so the idea or the challenge and the best possible way to learn is to start from A, proceed to B, C, D, until you reach Z or whatever. To decide, to give a pass. And in the same way, a pass is always a kind of strategy and a method. You can walk through this jungle. And the longer
Mhm.
you walk, the more experience you gain, and the better you uh, will be to decide what kind of information is relevant and to decide who am I? One of the most important things, who am I? The first challenge you have to do also when it's about investing. And the longer you walk through this jungle following this path, the safer you are, the higher your competence, and the better, and that's the final mission, the better your performance might be. But that's the whole idea. And that's the
Mhm.
reason why it wouldn't make sense to have some kind of portfolio of course fragments or videos, and you tell your friends and family and interested people it doesn't matter which video you start first and second and so that wouldn't make any sense. It's a pile again. I think that's the unique concept investing tries to realize and to follow.
Yeah, because in the end, every student has to define their own personal way of finance strategy.
Yeah, there are no secret knowledge. There are no experts who know everything much better and you just have to follow them. You have to find, as I already said, you have to find yourself. Like in this thousands of years old Greek saying, recognize yourself. I think it was written in the Temple of Delphi as a hint. You have to know who you are, what you want, what are your expectations, if they are realistic or not. And from this starting point, you have to start acting, not only within, of course, investing world, but in your whole life. That's my opinion.
Yeah, yeah. I mean, that it starts with like, what do I want? Do I want to retire with 40 or with 60? Do I want to have a house and a family? Yes or not? Because that differs a lot. And then you cannot say just follow the strategy of some famous investor because every person is different. And
And especially, maybe the core question, the mother of, or the father of all questions, whatever. What's my relation to money? We all live as long as we live in a society or a country or a culture which is based on money. Nobody can tell you that money is not relevant for him or her. Maybe they have a huge heritage or something like this, then it's not a problem at all. But we're living in a money-driven, financial-driven reality. And you have to define for yourself what kind of relation to money do I have. Because a lot of people say, I want to get rich. Why? You have to ask yourself, why do I want to get rich? To be safe? To have a safe heaven until you die? Or to buy some Lamborghini every week? Or whatsoever? To have a luxury life? And so forth. So really, in the first step, and maybe this question is a part of the question, who am I? What's my relation to money? Why do I want to have enough money? Do I want or need more money? How much money do I need? And so forth. And if you cleared this up with yourself, then you have a good starting position.
Interesting. That the next point I see a lot is that we have the need to have a certain amount of certainty, as little risk as possible, but of course, as much as like returns ideally. How can someone manage this certainty of, let's say, I analyze a company and I say, I believe that, and I can see the numbers and even the products of Apple, how much they sell, how many people run around with an iPhone. But then the stock market is also about the future, and no one can predict the future. So what do you advise someone just starting in this investing world to treat that? Because that fear of like, I invest in something because I think it goes up, but then it doesn't. How do I manage that?
To my opinion and my experience, but it's individual, there are two parts of a solution, a combined solution. What are the biggest enemies within financial markets? Two sisters, fear and greed. That means emotions, strong emotions. And in most of the cases where people, both retail investors and professional, let's call it professional investors, fail, the reason for this failing is based on fear and or greed. So you have to manage your emotions. And you're talking about risk, reward, and the relationship in between these two aspects. And in between, there's always fear and greed sitting and haunting you, talking into your ear, something like this. So you have to manage this to reduce your emotional, let's call it emotional volatility or something like this. And the second, the rather rational aspect, my recommendation, but it's just my recommendation, to take a little bit of deeper dive into mathematics. What do I mean with mathematics? Exactly, I mean two areas, statistics and probability. Because, as you mentioned, you use the word belief. People believe that a company might develop quite well within the next couple of years, or a share of the company or whatsoever, or a prognosis. Belief is not the right perspective. Belief is somehow related to faith. Faith, yes, within religion or ideology or something, it's okay. But religion, both religion and ideology, do not have any place when it's about financial investing or something like this. So when you're asking about the future development of a company, you shouldn't ask what yourself or other people, experts, believe or what kind of prognosis that you have. You should watch it from a perspective of probability. How high is the probability in percent that this certain company develops in a positive way? You can't make some kind of prognosis like analysts do, the 12 months prognosis. Yeah, Tesla now at 450, and in 12 months 600. Yeah, it's nice. It's a calculation. It's a proposal. You can read it, but it wouldn't help. The main question is just it's simple. Is there a higher probability that it goes up, or a higher probability that it goes down? And then it's about statistics. A lot of people think about looking back And they see, okay, the company had been developing quite well within the last 3 or 5 years. And then they make this huge mistake or error. Take the past development and project it into future. It's subconscious, so to speak. Not purely subconscious, but it happens. It's my own experience of failing. You see a line, you see a chart. It looks like this. It has been looking like this the last 3 years. If you that most people, if you ask that they draw it, then they might draw it like this. But within a week, it could go like this. But our subconsciousness, and again, our greed in this case, and our hope, also not a good advisor, hope would tell us that this line proceeds as it has been the last 3 or 5 years. So, solution, mathematics, statistics, probability, and control and manage your mindset, and especially fear and greed and other big emotions.
It's great because it's a topic that where you have to holistically kind of hone your skills and learn new things. You are a lifelong learner yourself. Like just recently, you've completed a machine learning engineer degree, and I know you're interested in a broad range of topics. But how, if somebody wants to start investing now and say, I embark on this journey, I will learn the basics of investing, I will learn a bit about statistics and psychology. How can I develop a modern way of learning and making it a constant habit for my life in our busy 21st century lives? Do you have any ideas, hacks, or guidance that you could give so somebody said, okay, how can I keep and stay on track and not just buy the next course or book and then just let it rot in the corner and never open it?
First, quite often I can hear they can't follow this and that course about investing, not our course, but investing, because it takes too much time. If you translate the sentence, people are telling you that they can't care for developing the competence that mid to long term would support them giving up the job they have to do that takes so much time that they can't participate in a course. So it's a little bit of a paradoxon. Yeah, it's not very useful. That's one part. And the other part, and that's the reason how the courses and the modules in InvestLink look like they look. There's a lot again, if you look at YouTube and other video-based channels, again, you see quite a lot of podcasts or something like this. They are not dedicated to learning in the very set, but about information that last 2 hours or 3 hours or even 4 hours. Who is able to participate in 2 or 3 hours? That's the point. It's macro. It's really a huge chunks of videos of information, and it's not very helpful. The solution might be, to my opinion again, so-called micro-learning. You have small units, you have small chunks that are related to each other, that are put on a line, as I mentioned before, but they are normally, like in our case, not longer than something like around 3 minutes. And it's a whole segment. It doesn't need additional videos if you don't like. So you have the possibility to learn in between, to take a small portion, and then if you have to do something else, to return 1 hour later or next day or something like this. And that way, with this strategy of microlearning, it's much easier to integrate this permanent learning process into your daily life without losing the track. That's the point.
Mhm.
That's our
So beyond the maybe 40 hours per week of work we have, we try to get really some time in there where we learn, and maybe with this knowledge we are able to then like invest, make some more money, and then in future maybe don't need to work 40 hours, just 30, and then we have more time to learn again.
Yeah, that's the point. But
Mhm.
one shouldn't forget this, in this case, small micro chunks of videos. What's the function of videos? It's talking about certain aspects, in this case, of financing. So it's purely the transferring of information, and it won't help you That's the reason why all these kind of video chunks or fragments, not fragments, but modules are embedded in an environment where you have to train and to do it yourself. And the most important aspect is not watching videos. Doesn't matter if it's a pile of videos, or in our case, a line of videos. The main aspect where you really start developing competences based on information you receive in these videos and additional information. To try it yourself, paper trading, not with real money, to do certain exercises, because that's when you learn how to invest. You open your depot, you start investing with game money, so-called paper trading, and you see how it works. You see how you react. You see how you handle your emotions, because you have no experience yet how you react in a certain investment environment. When stress is coming up, paper trading, you buy a share, next day it's down 5%. You ask why? You are happy because it's just paper trading and not real money. So you can also learn how you behave, who you are. And that's much more relevant than these videos on which everything is based. The videos give the hints, give you structure, tell you about the most important things, transfer structured knowledge about any important and relevant aspect of the financial aspect, and then you have to learn. And we can coach, we can, in a limited way, be mentor, but it's about yourself.
Very good. The classical learning by doing.
You could read thousands of books about oil painting. And then I tell you, okay, now you have finished your 3,000 books. You have a huge library at home in your living room. Everything about oil painting and everything, you know everything. You can talk hours and hours and days and days. And then I tell you, okay, here, start painting. Please paint like Vincent van Gogh. And of course, it's clear for us, you will fail. And that's the difference. You have to train. And you have to learn. You have to read and you have to train. That's the best combination. Information, experience, training.
Sounds inspiring. Gerold, in the past years, are there any new beliefs, habits, or behaviors that you have incorporated in your life? Learning habits or anything else?
Well, time is running out. What do I mean? You know, as you mentioned, when I went to Frankfurt, or when I started with my profession, something like this, you were born. So there is this. I'm noting that the older you get, higher you have to value your time. So what I developed as an additional skill, or I improved this certain skill, is to organize time and to think twice what to do with my time. What's a waste of time and what's a relevant time. And it's the same with investing. I stopped reading all possible information about certain stocks or something like this. I try to focus as much as necessary, as few as possible, so to speak. And I try, and this is a permanent lifelong project, I try to keep out my emotions in investing as much as possible. And by the way, also in any other things I do. And to try to be as structured as possible without becoming a control freak or something like this. Again, structure, organization, and all these other important things as much as necessary, as few as possible. That's the thing I have been dealing with in the last couple of years, and the personal development, I think that's one of the most relevant aspects in my life. And I developed a more and more completely relaxed relationship to money, with money. That's also the point. You shouldn't take money too serious. Also, you try, of course, to increase and to perform with your portfolio and something like this. But it shouldn't be an obsession or something like this. You should see it in a very relaxed way, because
Yeah.
it's a good, being relaxed is a good precondition to focus, to be concentrated, and again, not to become a victim of fear and greed and other aspects.
Yeah, I think I implemented this for myself. I see time itself as an asset, same like money. And actually, the work I do is for the time and less for the money. It's about like the time I spend into a project,
Yeah,
how much of it do I enjoy, and how much of it brings some outcome. Let's say something that I produce that other people then can benefit from, and then it's okay to work less if you have a high output, for example. And also when you feel ever like stuck and say, okay, this project is not moving forward, you can always like look at yourself as like, yeah, because I have done a lot of things that actually have not really helped this project. I have done all the other non-important things, but haven't tackled the really juicy ones. So I like that one. Like really prioritizing
yeah.
time even over money also gives you the priority to focus on other things, right? Like family, pets, and other
Health,
life
very
things.
important. And even additional, this permanent daily work of staying as open-minded as possible,
Hmm.
being even more open-minded. I think that's one of the core abilities or skills or whatsoever. During lifetime, that's what they say, and maybe this might be also sometimes my own experience. You develop more and more biases and mental cognitive self-restrictions,
Hmm.
and you permanently daily have to work to keep the gates open, the perception open, the cognition open, and open the gates even more. That helps in general, and of course it helps also in the financial markets, because it supports you being skeptic in a constructive, positive way, and not falling into traps of being influenced, or hope again, prognosis, wrong numbers, and all these things. And it also helps you in a social surround, of course, because that moment you start thinking that everybody else is an idiot or something like this. One, a very lonely person, and two, stop learning from others, which was also a really important thing. The so-called swarm intelligence or something like this, as they call it. But you can learn from everyone,
Hmm.
definitely from everyone. And that's an additional segment of your lifelong learning and the necessity for lifelong learning.
It's a great one. Let's look at investments. What is the best investment you've ever made? Can be financial or not financial, whatever comes to your mind.
It's a simple answer. Investing into the development of my own competences about investing. That's the meta competence, and that's the meta asset, so to speak. Otherwise, everything is by accident. So, and one level lower, in a trivial way, the best investment I ever made is Tesla. It has been like this over years. Also, it's a roller coaster. The Tesla shares are roller coasters, but fortunately, I also trade with options about Tesla, so it helps survive. But it's definitely one of the most interesting companies with the most challenging, genius business models. And it has been like this within the last at least 6 to 7 years. But in future, with AI coming and robots and all this thing, it might be even more interesting. But this is not a recommendation, of course. It's just my experience. I know a lot of people do not like Tesla because they do not like Elon Musk. But I think one has to differentiate between a company and its founder and owner, main owner, or something like this.
I think
But in
there we are.
general, my experience in general, maybe assets or stocks from the US markets are definitely performing higher mid to long term than, for example, German financial markets, German companies or European companies.
Yeah, there definitely was some like Tesla, which are mostly traded on opinions, even though
Yes.
they have fundamentals that somebody could analyze, but it's all about the story and if somebody likes or dislikes the story.
Again, biases, political biases, social biases, whatsoever. Hearsay. A lot of people do not like Tesla based on hearsay. A lot of people like Tesla based on hearsay. And there's quite a few minority people that try to understand Tesla. And it's your decision if you think Elon Musk is I don't know, whatsoever, evil person or a moron or a good person or whatsoever. It's your decision not to buy the stock. But in general, I think if you want to participate in the financial markets and you look at Tesla as this example, and its very, very futuristic and sustainable concept of energy, renewable energy, then Tesla might be a little bit different as a company than, for example, some kind of weapon producing manufacturer. But it's an individual decision.
Yeah. We have discovered in the course also about like personal values and how you can define your personal values, and then you can even choose based on that as well, which stocks to choose or not to choose. And being aware of it, that if you buy an ETF that spreads across, you might have companies in there that you don't like. So many students appreciate that we cover this as well too. Where you mentioned before, like being self-aware about one's own decisions and values, and um, because it's important, and give a company money to do something with it.
Yeah, that's a good point. Most people do not have in mind that that moment you buy a share, doesn't matter if it's one share or 10,000 shares, you become a shareholder of this company. You own a part of this company. And you always have to ask, from this point of view, do I want to own a part of this company? It's a really, really important aspect. And of course, investing is not only a financial act. It's somehow also a moral act. And the more important moral investing is for a single person, the more she or he should follow it. But it's clear that in a lot of cases, moral perspective and the performance perspective are not really strongly correlated to each other. That means sometimes you have to accept that if you have some kind of ESG moral approach towards your investing, that you reduce your performance. And when it's okay, then it's okay. And it's okay if you decide, but you have to keep this in mind before you do it.
Good point. Thank you. If you think about a young person just being in university or about to really enter now the job market, what type of advice would you give that person, and which ones should they ignore? I know you have in the Brand University every 6 months people coming on the job market, but what would you give as an advice to someone coming out of fresh from university or school?
Again, not to follow patterns you adapted to, cliches, imaginations, or daydreams or something like this, but to follow your own path or to find your own path. And if you dream of becoming employee, for example, of a famous brand company or something like this, do it, collect some kind of experience. But in any case, as soon as possible, try to be as independent as possible. Because you should never forget, once you are an employee of a company, they're paying you most of the cases for your time. So you're wasting time. And in case this is a company making profit, you are not participating in this profit. The shareholders and the owners are participating in the profit. And this is not an optimal situation. So independent if you become an employee or if you get independent, at least mid to long term, always try to keep in mind that you have some kind of income situation. Doesn't matter if you invest or if you work, where you are able to participate in your high performance and your success in a fair way. And normally, as an employee, maybe you get some additional incentives or something like this. But normally, and still nowadays, and especially in Europe, it's an unfair relationship. They pay you for your time, and the rest of the profit the shareholders take. And you should try to get rid of this within a company, as an employee, or as a future startup founder or entrepreneur or self-employed or whatsoever. Not everybody, again, Knot is ja Auton, not everybody is a startup founder. There are people that are completely good team players or fit into the management structure, the organizational structure of a company. But always try to become or to stay independent as much as possible.
Yeah, because what you want is that people are not just consumers, they should also be turned into owners of things.
Yeah,
And
that's the
owners
point.
owners not in the sense of like, yeah, I just collect like fancy bags. Maybe yes, if you try to really collect the best ones that you can later sell, but more of like, even if you don't want to be a startup founder, maybe you just start investing in the stocks market and you own parts of companies, and then you can participate from it, that other people work and make more money and such. I think it's a really nice concept that, yeah, I also didn't think about before I opened my own company. I was afraid of it. I was like, oh, I'm not sure if I'm ready to have my own company, to take all of this responsibility. And I saw you can even be an owner of companies in fractional shares, so just in some parts, but just starting to invest. So that's
Yeah,
actually beautiful.
and here's this strong correlation. Taking your financial destiny, or whatsoever, destiny sounds good, into your own hands as much as possible, step by step, makes you rather independent from other people, from your working contract, from spending your time and dedicating your time to the owners of a certain company you work with or you work at. It's quite rare that this is a healthy relationship. So it's nothing nicer, for example, if you love working in companies based on a contract or something like this, or as an employee. Nevertheless, there's nothing nicer if you're doing this by free will and not as a necessity, as a financial material necessity. Like, I have to work. I hate my job, but I have to work because I have to pay the rent and all insurance and all this thing. I have this pension and retirement insurance, and I know it's not enough when I retire, but nevertheless, it's quite safe. I feel safe and so forth. But the moment you have a second leg, so to speak, an income leg, a long-term leg, like investing in stock markets as an alternative to concrete gold or something like this, as they call it in Germany, buying an apartment or a house, you feel free and you have a free decision. You can stay at the company because you like it, and you can leave it because you don't like it. And that's the point about money. You can manage your time. You can decide about your own time.
Mhm.
If you have a certain amount of money, the more money you have, the freer you can decide how to spend your time. And the less other people that paying you or what else can decide how you have to spend the time.
That's great life advice. Thank you so much, Gerold. Last question to you. Who should I invite next to this podcast?
People with alternative but nevertheless interesting access to statistics, probability, trading, something like I don't know, for example, a poker player or something like this. Because why poker player? Because, there's a lot of people in the financial markets, neither investing nor trading, but just gaming. They behave like in a casino, playing roulette, chuck, chuck, chuck. But beyond this cliche of playing games and poker games, I think there's much more behind to, for example, being a professional poker player or something like this. It's a lot of science, concentration, and other aspects that are very rational and not by chance, but by calculation. So it would be nice to have some insights from a poker player or a similar person.
I have a good idea who I can interview on this point. Thanks for the input, and yeah, especially thank you for all your life advice. This is really valuable for myself, but definitely also for our listeners. Thanks again, Gerold, for sharing your expertise.
Thank you
Um,
for having me.
Really good. We will definitely do another session on other maybe more deep dives. We'll see. Listeners, if this content sparked your curiosity, explore Investling's free online course on learn.investling.org for structured steps to reach your financial goals. Remember, this is financial education, not financial advice. And remember to subscribe to our channel below and keep learning with Investling.